Welcome everybody. How we doing?
How's it going, River?
All good, good.
Yo, what's good? What's good?
How's it going? How's it going?
Coolin', ready to learn.
Right on, man. Love to hear that. Yeah, we'll
Doing
see.
good through the river. How you been doing, man?
Oh, dude, good, good. We've found ourselves in a couple of good trades lately, man. It's been good. Life's good. Market's been fun. I'm a simple guy. I can't ask for much more.
I agree. Did you catch a lot of that downside today on SPY?
Bits and pieces, and well, bits and pieces. Yeah. We actually we had a sick one. We got short up here somewhere. So we did have one sick one. Oh, and then end of day, we caught this as well in the voice chat, which that one was pretty sick.
Nice, nice, nice.
Yep. Yeah, funny enough, this one paid better than like the big old knife that we caught. But this was like if you did the ad like I did, it was about 200% right there, so that one was fun.
Nice, nice. I did a little right there in that the bottom of that candle.
Mhm.
I shorted just I was just hoping it would break and run down to that low.
Yeah.
And
And it
she
did, I
she
mean,
just held it.
they got me down here. I was waiting for this dip. We played this trade. This was a nice quick little scalp too. I was waiting for one more candle push down here, get me somewhere down in this area, and they didn't give it to me. But then the one that I was regretting, I had been saying I want us to pop and hit this spy call and hit a short into the close. And I cashed my spy call, my last one, like right here. Didn't take the short, just called it a day. These ones were massive. I mean, those 660s went just insane on that.
Very nice.
But it's all just end of day. Lottas, they're fun. They aren't even that's not even trading. That's just having a good time. Trying to play the market quick.
Yes, sir. People's
Yeah, use the space sector as your hedge for volatility. This was a clobbering today. What a short. 13% off the highs. What just an absolute clobbering.
what happened there? They had some type of bad news or something?
Nah, this thing's just been on the run of a lifetime. So weak market finally showed up, and it was time to pull back. I think it was. I don't know. Maybe there was news, but they ran 185% in 29 days. Um, and so sellers had to show eventually, and apparently today was just that day. I mean, I guess I didn't even. Yeah.
Nice, nice. Have you looked at FTAI? I remember at one point that was just going vertical, but I haven't looked at it in
It
a long
was,
time.
yeah, and I mean, ran straight back up to these highs. Somebody was asking me, probably Norvin. Norvin loved this one. I mean, Norvin loved this one down here. It was actually a sick call for him. I'm sure he's not in there actually. But absolute just moon on that thing as well.
Look at that candle down though. That's crazy.
Yeah, it is a weekly candle, but still, but this was, all of this clobbering, that was the beginning of the year stuff that we were dealing with. Um, early tariff talks, early all of that stuff. So we'll just give this here another second and get to rolling. Doubt this is going to be a very packed class. And it's honestly not going to take super long. So I was figuring at the end we could probably just do some charting. It's always fun to look at charts after we've had some nice big moves in the market. So we'll probably get into that. But make another post real quick. And, Did you? Nice. Good for you. Good for you. I wonder who's gonna replace this thing in the S&P. It's got me curious. I did catch this nice little bounce. Remember, I told you I wanted to feel the pain again. I did catch this little bounce. Now I'm kind of regret not holding it, you know? But yeah, if they take this thing private, I wonder who they'll have to replace it with somebody. Yeah. I know, finally paper hand on it's hilarious, dude. After just the suffering, like here was our suffering. After this suffering we dealt with, had to get back into that pain. But now, I
Speak.
mean, realistically, you should just short this thing anytime it pops to 15 or above. Because you know, I gotta believe this 14 to 15.50 range is virtually gonna be what we get until the deal is either official or canceled.
Speaking of going private, didn't EA get sold to the Saudis and go private?
They're working on it. It's not official yet. Somebody was asking me about it just today, so I can actually talk a little bit about it. The buyout price is 210. So there's an arbitrage trade to be had here. The tricky thing is we don't know when the buyout's going to come. The buyout, I don't believe, is 100% official, and it could take a year. So, I mean, if you can get contracts that are, you know, because when the buyout comes, they'll price everything perfectly. It'll basically move to 210 in the blink of an eye. And if you're in a 205, it's going to be worth 500 bucks. So if you can, you know, watch this chain, you can find yourself into a trade where you can make almost, you know, not guaranteed money because the deal has to go through, but almost guaranteed money. You know, that's what arbitrage is. You know, we know it's going to 210. So you can't buy a 212, that'll go worthless. You can even look at the chain already, it's barren above 210, because that's the buyout price. So if you can find one, you know, somewhere in that, I'm assuming it does, you know, the $2.50 strikes, but some, you know, 202.50s, 205s, and do the math on the intrinsic value, you know, less than 750 or 500 bucks. And there's a few bucks to be made there. But not much for any sort of like a fun trade, you know, set and forget sort of trade.
What if you
Taylor.
just bought shares?
They'll buy them at 210. You can make 10 bucks. If the deal goes through, you'll make 10 bucks a share. I mean,
I'm not,
I mean, right here at 200, it's a nice 5% return, you know? I mean, that's cool. But yeah, you'll get your 210 bucks, or the deal doesn't go through and you will crush right back down here to 170. I think the deal is relatively set in stone, you know? But that's what any of the buying that we've seen since that deal happened is a bunch of people looking for their 10 bucks, you know? Okay,
I got you.
let me make one more post. Rudy, how we doing? Avenger, yeah, T, man, I'll tell you what, I mean, slightly regretting not buying here. Ugly daily candle on it. See if I can get one more sell down. I want it down here, 25, something like that. This is a dip I've been waiting for a long time, you know. I want it down here, 25, something like that. My buy was not smart. I know. But I want it down here to like 25. We'll see. Got a few things working against it right now. Even long consolidation holding this 26, I'll hop back in there with some time. But for now, being a little bit careful. Yeah, Crash, that's perfect. I mean, that's perfect. Are you selling weeklies on it? Like you're saying 15C this week? I would love it. I would do it every week if I was you. You got into shares down here? I love that. And especially with shares. I mean, T's a buy. T is always a buy. I mean, don't get me wrong. I know like Verizon and T-Mobile both have like a bigger market cap. AT&T's not going anywhere. They're the leader of fiber, you know, for those names. And so stick with T. And you got your divvy coming, you know? Yeah, exactly. And dude, if you get, you know, this is a little more advanced and not what this topic's on. Dude, we get a pop over 1550, you know, are we gonna pop up here over 15? Sell the 15s, sell the in the money one. The premium will be huge, and you know how those things get. If that thing drops out of the money, it will get crushed. You like the bet you will make a nice return going out of the or in the money to out of the money on the selling premium side. Or somebody buys the shares at 15 bucks, who cares? Nice, you've been holding an excellent T call, finally seeing some green. Yeah, I'm not. I'm down bad. Yep, exactly. Okay, well, with that, welcome everybody. Happy to have you here, Dirty River. Tonight, a little bit different of a class than I normally do. Still gonna be, you know, talking charts and all that stuff, of course. But tonight we're talking about different sectors of the market. And so you might hear me talk about it, you might hear Tilia talk about it, you might hear Shark talk about it. You know, we're going to be the main people who talk about money rotation, money going places, you know, maybe leaving the big tech trade, going to financials, those kinds of things. And so tonight we're going to talk about the different sectors of SPY. So there's 11 sectors of SPY. If you've ever heard, you know, you guys have all heard me talk about XLF, XLE. Those are sectors of SPY. So those are what we're going to talk about tonight. We're going to, you know, spend a little bit of time going over each of the sectors, what they hold, why they might be of interest to you or not of interest to you. And then after that, we're going to get into a little bit of talk about blue chip stocks. It's not necessarily a sector. Funny enough, nowadays people think of blue chip stocks as, you know, your Apples and Amazons, things like that, which they of course are, but your blue chips are just your nice, safe, staple stocks. Typically in the Dow, you know, relatively consistent. It used to be not very volatile, but once we got your Apples and Amazons and things in there, some volatility was added to those. And then the final thing that we're going to talk about is the commodities. Not necessarily, you know, calling it a sector isn't the right way to go about it, but we're going to talk a little bit about commodities, and what commodities are things like your golds, your silvers, your oils, those sorts of things. And so with that, unless anybody has any questions to get us started, yeah, you're already talking gold, yep. Unless anybody has any questions to get us started, we'll just kind of get right into this. Like I said, well, I guess I said this before most people joined. Not a ton of like information in this class tonight. I definitely won't take the whole time just talking about the different sectors of the market. But at the end, definitely going to have some time for charting. Hopefully, you know, we've had some nice big moves in the market lately. Things finally presenting some dip buys or maybe some things we should avoid buying the dip on. So we'll check out some charts at the end of it all. But with that, like I said, so what we're going to be talking tonight is SPY. All of us trade SPY. I think all of us trade SPY. Most of us trade SPY at some point, whether it's you do it alone, you do it in BC with me or Nando or whoever. Most of us trade SPY. One of the most common things that I hear people say is, you know, why did SPY bounce there? Why did SPY sell off there? You know, the actual why you know, we'll never know exactly what caused it to sell off at these places, but people always try to say, God, SPY has a mind of its own. And so that statement is about as wrong as you can be on anything. So SPY is an ETF. For anybody who doesn't know what an ETF is, it's basically a company bought a basket of stocks, you know, a group of stocks, they put them all together. And if you buy a share of this company, then you're buying little bits and pieces of all of the stocks that are in it. So when we talk about the S&P 500, it is the 500 largest companies around. And it is the ETF that we use to trade all of those at once is SPY. So the other thing, SPX, don't trade it. We won't talk about that tonight, but SPX, its value is based on overall market cap. So when we look at SPX, we see it's 66.29. When we look at SPY, we see that it's 660. So that's why it's not a direct 10x, you know, of SPY is not a direct 10x to SPX, because since SPY is an ETF, it is actually weighted. So SPX, there's no weighting. Nobody matters more than anybody else. It is just a calculation worth of, you know, it is just a calculation of all the market caps, and that's the number they end up with. If you want to look at the math, you're welcome to do it. Boring, but you're welcome to. Well, SPY has weights. And so what do I mean? You know, SPY has weights. Well, it holds 500 stocks. Some of them it owns a lot of. You know, like the big names, you know, your Apples, your Amazons, all of that. They make up a very large percentage of SPY. You know, I don't actually know the numbers off of my head, but I believe Apple, Amazon, Microsoft, and Nvidia are all 5% plus. That might not be exactly right, but so you're looking at 20% of SPY right there. So that is why I say when people say SPY has a mind of its own, it absolutely does not. SPY does exactly what the things inside of it tell it to do. So that's why when any of you guys have scalped with me, I'll say, you know, we have this on Apple, Amazon, Microsoft, Nvidia. I'm going to take SPY calls or whatever it is. I'm using the technicals on SPY, of course, a little bit. You know, I'd like to, you know, have things line up at proper levels, blah, blah, blah. But if the big names inside of SPY are not telling me to buy calls, I'm not going to buy calls on it because if those things aren't going to go up, SPY is not going to go up. Well, when we start talking about market sectors, as I said, SPY has 11 of them. You know, to cover all of the 500 stocks that are in, I think it's even more, a little bit over 500 stocks that are in SPY and are in the S&P index. And so what are they? And what are all the different ones and how can we trade them? So something that I have, you know, I have this pulled up when I trade all day, every day. You don't need to by any means, but I do think that it's like it's a sweet little tool to kind of show you something. And so I'm hoping you guys can see this. Let me see, make sure you can see it. You guys see what I just pulled up here? Well, nobody says yes, so I'm taking that as a yes.
Yes, yes.
You see it? Good. Okay, so this is all of the sectors of SPY. This website is, I think, sectorspiders.com, spdrs.com, and it's the sector tracker. So what this is, it is showing you the performance, and it's updated in real time. I mean, there's a little lag to it, you know, but it's updated in basically real time to tell you how each of the sectors of SPY are doing. So when you guys hear me talk about XLE, here's XLE, the energy sector. When you hear me talk about XLF, financials, the financial sector. So I'm just going to kind of cruise through these. We're going to talk just a little bit about each of them, you know, what they hold. So maybe it suits your type of trading that you know, you want to, you know, maybe it's a trading you want to do. And so why I'm doing this lecture tonight, is because people, you know, traders, and I'm guilty of it as well, you know, almost everybody, they just focus, you know, they just focus on big tech. Like I said, your Apples, Amazons, Microsoft, Nvidias, you know, Tesla, you know, all of those names. Well, there's literally thousands of other stocks, and there's at the very least hundreds of other stocks in SPY alone that you can trade. I know not a lot of people are you know, are comfortable with volatility. You know, we see it in trade floor all day long, whether it's somebody complaining about a trade going red or being a stop out, or, you know, oh, I buy these and everything instantly goes red. You know, part of that is just trading. And then and it's not just retail traders, the entire market is hyper focused for the most part on big tech. You know, that is what the market pays attention to. It's what it uses as kind of its gauge for how everything else is going. You know, if big tech keeps putting up good earnings and keeps spending a bunch of money on AI, the bull market we're in is, in my opinion, going to keep going. And so everybody focuses on big tech. Well, we don't have to. You know, look at Shark, look at 1K. I mean, even look at Nando, you know, of course, you know, all those guys trade some SPY, trade some QQQ. But they trade the slower moving names, the friendlier names, you know, and I don't want to say necessarily easier to trade names, but the lower risk, you know, like look at 1K's tab. And like I said, you know, he trades, you know, he trades SPY, he trades all that stuff too, but he's trading Delta Airlines, he's trading, you know, AT&T, Coca-Cola, some of our favorites. They're slower moving, they're safer, and there is hundreds of them. You guys know that I love to trade AT&T. Most people hate to trade it. It's just something that over the years I've had fun trading. I like trading it, so I trade it. Well, tonight we're going to talk about some of the sectors, talk about how some of these names move, and talk about some of the different stocks that you can trade. So obviously, we're going to start with communications. It's one of the smaller sectors of SPY. I don't remember its total holdings off the top of my head, 20 or something like that. And it's, you know, it's your AT&Ts, your T-Mobiles, your Verizons, those all are all in there. But this is also one of the sectors that holds, you know, your Meta, your Google, because those are, in a funny way, communication things. You know, they really are. Even I think Warner Bros is in there. And so all of these, you know, these names tend to move quite a bit safer. Obviously not Meta, but you know, your T-Mobiles, your Verizons, your Warner Bros, all of those. Of course, not going to be amazing liquidity, nothing like that on any of the options. For some of these slower moving names, but they're much, much safer. It's a much less volatile sector of the market. So if you're looking for less volatility, some cheaper swing trades, start checking out some of those communication ones. I don't, and some of these I'm going to be wrong on. Feel free to check me. Rarely do I trade options on any of these sectors. All of these sectors offer options. Really, the only two that I partake in options on is XLE and XLF. They're slightly higher liquidity. They're easier to get in and out of. Some of them have horrible liquidity. I mean, the 50% wide spreads, no volume, no open interest. So I don't necessarily recommend trading these, you know, the XL things, you know, all these XLCs and Ys and stuff, but find, you know, a sector that you're like, hey, this one's not very volatile. I like the names in it. So that's your communications, consumer discretionary. This is going to be your Home Depots, your Lowe's, your Starbuckses, your McDonald's, all of those. It's definitely a higher liquidity one of them. It's bigger holdings. I believe, I'm sure Amazon's consumer discretionary as well. There's a chance Tesla's in there as well. I think a lot of people consider it consumer discretionary, so I'm sure it's in there. These are, again, outside of your Amazons and Teslas and things like that. Going to be some slower, safer movers. You know, look at Home Depot, look at Lowe's. These are ones that, you know, maybe home sales are doing really good, new home building, all of that stuff. You go start looking at your consumer discretionaries. You long your Home Depots and your Lowe's and your Decks and all of those names. And trade the consumer discretionaries when that is what the market is telling you to buy. You know, oftentimes in low spending environments, things like that, if you're into shorting things, consumer discretionaries can be a very great place to be short. You know, they need that retail spending. And so if retail spending is down, then chances are you don't want to, you know, then maybe you don't want to be longing some of those discretionary stocks. Let's see. I don't know what you posted there. I can't see that right now. Yeah, nice XOI, great one for Walmart, you know, and yeah, and it's buying, you know. So consumer discretionary, I don't know how that's the name that they landed up on, but it really just means retail shopping places. You're gonna like, you know, your Starbucks, your McDonald's, your Home Depots, all of those types of things. You know, I don't know why that's what they named it, to be entirely honest with you, but that's just the sector that they fall into in SPY. It's also a large one. And so again, I don't know off the top of my head, there's probably 40 or 50 different stocks in there. So it is a big chunk of SPY on its own. Yeah, sorry, I can't give you a better answer of why it's named that. But that's what it's named. So next one we got XLP. Terrible liquidity on these ones. Don't trade those ones. But consumer staples. So these are your Coca-Colas, your Pepsis, your Costco's, Walmart's. They are consumer staples. They are staple businesses for the consumer. That name makes great sense. Procter and Gamble. A lot of people don't know, but they own like everything. Philip Morris. No, not ranked in order of liquidity. And when I'm discussing liquidity, I'm exclusively discussing going and trading XLP options. I mean, I guess I should I should, you know, verify this a little bit. Let's see. XLP. Yeah, like, you know, for example, on the weeklies that there was 100 volume today, 9 volume on some 2-week out ones. So you don't want to be trading these. You want to be aware of sectors that could be strong or trade in a way that you like, you know, your Coca-Colas, your Pepsis. I mean, Walmart can put in nice moves. Obviously, Costco's expensive, but your Coca-Colas, your Pepsis, your Philip Morris's, all of those are going to be much safer, slower traders. And as I said, there's a bunch of them. You know, you can find companies you like or dislike or whatever and trade them. But you know, your communications are going to be super slow. Consumer discretionary is going to be kind of that mid-range, consumer stable, slower movers, safer things. When you're looking for volume, there is no like set in stone thing, but I like to see a good chunk of open interest. You know, it's going to be tough on some of these names. You might only have 1,000, 1,500 is going to be about the lowest open interest you want to be looking for, and then be putting up, you know, dozens to hundreds of volume a day. I know that's funny when we trade SPY contracts that'll have like 300,000 volume in a day on them. But a AT&T contract's never going to do that, you know? Just make sure that there's enough open interest and enough volume that the spread isn't massive, you know? You don't want to be buying things that the bid is 15 and the ask is 30, because that means there's no buyers for it. So next one, XLE, you can see one of the only green sectors today, funny enough. This is energy. And when we're discussing energy, it's oil. You know, this is your Exxons, Chevrons, Conoco, Williams, all of the big names. Not a huge sector. As far as total holdings, again, off the top of my head, 20, something like that. But a mover. Oil moves the market. And this is actually pretty big holdings in SPY, you know, relatively speaking. So there is a lot of money in the XLE sector. You know, it's your energies if you want to trade oil. Very great way to be involved in the oil trade. Of course, you aren't just trading the straight commodity or anything like that. But, you know, if you're trading Exxon, you're trading oil, you know? So next one, financials. Again, one of my favorites. Like I said, these are two of the only ones that I do trade options on personally. XLF, plenty of liquidity there. We've traded in a voice chat many times. Financials, pretty cut and dry. You know, Visas, MasterCards, JP Morgans, Berkshire Hathaway is likely in there because it's virtually a bank, you know. And so it's going to be your banking sector. These are generally speaking going to be slower, safer movers. Obviously, you know, JPM can put in a great move, but Bank of America, wonderful to trade. Nice value on contracts, moves slow enough that it has plenty of safety, but fast enough that the returns can come relatively quick. You know, you aren't going to find yourself locked in a multi-week swing on it or anything like that. You can get a nice volatile move in that financials. I mean, we see it today, even, you know, worst sector in the market today was financials. It was pull up the chart on it. Absolutely clobbered. And this is huge money on these kinds of things. It oftentimes trades very, very technical. Of course, today was a clobbering, but it's one that loves to sell to strong. And I can't lie, I hadn't really looked at this. It's one that loves to sell to strong support and then find some buying. I am buying XLF tomorrow morning, probably. So wonderful to trade. You know, XLF is great to trade if you don't want to. Yeah, I've seen the bad loans thing. KRE got hit with it hard too. I think it's just a little bit of a credit scare. People might be, you know, a little more in debt than they want them to be. But technically speaking, I'm probably ready to buy the dip on XLF tomorrow morning. But I haven't read a ton about that news yet, so we'll see how it plays out. So then from there, back to our sectors. XLV healthcare, you know, pretty cut and dry. This is going to be your, you know, Johnson and Johnson's, your AbbVie's, United Healthcare, all of those. Eli Lilly's going to be in there. I have a Sean just got wrecked, huh? Yeah, funny moves on it. Yeah, so it's going to be your healthcare sector. You know, your big name healthcare is, of course, you know, always going to be the largest ones around, generally speaking. And so healthcare is one, tends to not catch a lot of love. When healthcare names do start catching some love, they can really get to running. We saw it on Johnson & Johnson with that shark trade. Very, very nice trade on that. Nice big move out of it. Johnson & Johnson also being one of those blue chip stocks makes it relatively safe. So if you're into the healthcare sector, if it's something that you like to track, these ones can definitely get to moving quite a bit faster. A good amount of volatility in there, and a big sector. I don't remember how many they hold. Oh, I should just be looking. I think they got like 50 or something. They got 60 total holdings in the healthcare sector. And so big sector can see some movement, lots and lots of names in there to trade. One that I love seeing, Pfizer's, Merck's, those kinds of things just get clobbered buying the dips on those. Oftentimes can be pretty dang rewarding on them when, something happens that a medical thing goes on and they start moving again. AbbVie, obviously a big mover as well. UNH in recent times, a big mover, generally speaking, was not, but in recent times, pretty crazy. Next sector, industrials. This is going to be your General Electrics, Caterpillar, Raytheon, Boeing, all of those big names are going to be in here. Again, another very big sector in it. I guess we could just be looking at some of these index weights. Yeah, we got your G's, your Cats, Raytheon, Uber, funny, big holdings in Uber, the other GE, Boeing, Union Pacific, long, big companies, John Deere, these are companies that do a huge amount of industry, whether it's, heavy equipment, building buildings, there's going to be HVAC things in here. There's going to be a little bit, I mean, we got the GE Aerospace. There's going to be a little bit of everything in the industrials. It is all the industrial side of America. So another good one, XLB Materials, this is going to be your gases, your oils, your gold miners, yeah, Newmont, one of the largest gold miners around. Lind is a huge gas supplier. Sherwin-Williams, obviously, all kinds of chemicals and paints. So XLB, I got to be honest with you, I think I've traded NEM before. This is a sector that I basically would not even touch. Yeah, Dow might be in there. Yeah, I've traded New before. Dow could very well be in there, big chemical company, I don't mess with the materials. It's just one of the sectors that like I said, I mean, I'm sure I've taken a couple trades on them over the years, but it's just a sector that I don't even mess with. It's never been like interesting to me to trade. Like I said, I like to trade things that I enjoy trading, and I'm pretty hard pressed for me to find some in the materials sector that I want to trade. Real estate is another one. I basically never touch it. You're gonna have, I mean, it's gotta have Welltower. Yeah, Welltower, Prologis. These are, this is like they do healthcare infrastructure. They are gigantic. These Prologis they're all warehouses and stuff, so they do huge commercial warehouse stuff, all kinds of logistics things. I mean, and public storage, we all know that, storage. Realty, huge. So obviously real estate. So again, a sector that holds little to no interest in to me. However, when the time is right, I did trade a lot of these names in the 2020-2021 moves because there was so much home buying going on. Prices were cheap, all of that. And so that was really the only time I was touching the real estate sector. And then XLK, tech, needs no description. Here you go, your NVIDIAs, your Microsofts, your Apples, Avgo, Oracle, everybody. Uh, that Prologis in real estate is crazy, but dude, look at their commercial holdings. It is mind blowing how much warehouse space they own. So obviously we don't need to talk about tech. Every single person knows what tech is doing. Yes, XLK will oftentimes mirror the cues even better than SPY does. SPY obviously basically moves on these. XLK, terrible liquidity. It is tradable. And on Ripper tech days when everything else is weak, I'm still personally always going to go cues, but XLK is tradable. Terrible liquidity oftentimes, but big chunk of SPY, 68 holdings in there. That's a big one. And so, you know, be you know, we're not talking about tech. Think of everything else. I know there's a million fun things in tech to trade, but think of everything else. And then our final one is going to be our utilities, which, this is going to be NextEra. Let's see. Oh, look, there's AES, smallest holding in there. Your NextEra is your constellations. These are going to be your big energy companies. Like these are utility companies. I mean, NextEra, I believe, is the largest utility company in the world. Feel free to double check me on that. Constellation is giant and electric and natural gas. Duke is huge, uh, you these are all very tradable. These utilities can put in some very, very nice moves. And because we have such volatility in the energy sector, you can actually find very good moves in the utilities because, you know, there's natural gas shortages. Maybe you want to go look at Constellation because they're so involved in natural gas. You know, anytime we have big energy fluctuations, which is all the time, I mean, the oil market is insanely volatile. You can very oftentimes find a very nice trade from the utilities. And so with that, that's it. Well, that's all I want to cover on the SPY sectors. We're going to touch on a little bit else real quick. And then we're just going to get into some charting, like I said. So the next thing that I want to talk about, and we aren't, you know, this one's going to be very quick. The next one that I want to talk about is IWM. Nice work, Agent J. So the next one that I want to talk about is IWM. Calling it a sector is not exactly right, but it is. And for anybody who doesn't know, this is IWM. So it's the Russell. This is your small caps. This is one, you know, Tilio and I were beating the drum way back 2020, end of 2022 into 2023. Rates going down, rate cutting cycles. This is where you want to be looking long. Small caps are something that benefits massively, arguably better than anybody else in a rate cut environment because they need debt. You know, they're small caps. They need to take on debt to try to grow their business. The lower they can get the Fed funds rate, the lower they can borrow money, and the theoretically more money they can take with the cheaper loan. So if you're into trading the small caps, again, this is the Russell. IWM holds like a million things. You are not going to find, you know, you are not going to find like, you know, how I watch just a few things for SPY. You won't find that with IWM. The largest holdings in there, I believe, are under 1%. I could be wrong, but I believe every single of the largest holdings is well under 1%. And so yeah, shall I trade? I don't know when if you can tell me, if you type me the FOMC date, yeah, we'll check it out. So it's your small caps. It's your, you know, your names that are trying to grow and they have potential to grow and they're definitely higher risk, but in rate cut environments, you can really see big runs out of them. So this was a funny one because, so if we go way back here, you guys can see I trade this relatively frequently. So here we go. We know where the rate hike environment started, right here, because small caps got crushed. Now, they'll only sell so much. They won't sell forever. And so once we got the fund rate where the Fed wanted it, we chopped and we chopped and we chopped for virtually all of 2022 and all of 2023 until they start cutting. And so here is our breakout for the small caps. Given obviously, you know, massive retest in April, this was, you know, small caps hate tariffs, that's for sure, because they you know, they need to make as much money as they can and they don't do well making money. You know, in that situation. So then, so that's it. Small caps. I love trading IWM. It's SPY, but friendlier. Oh yeah, you got me the date. Okay, so let's see. Custom. It was 09 16. I swear we traded this. Yeah. Oh dang. Well, here you go. I mean, I'm unfortunately on the hourly chart, and I think if I change it, it's going to screw me here. Oh, here you go. Give me 1 second. So here you go. Obviously, rate cut, absolute explosion. You know, fully like these things are going to love a rate cut. But as we knew, it was definitely a hawkish cut. But 1.8% rip on this thing. And then obviously the sell, you know, was 3% down. But 2% pop in 2 candles. This loves rate cuts. This thing loves rate cuts. Okay, so now we got 2 more. Next one, not necessarily a sector, more of just a thing you can consider trading. And it's the blue chips. And so a lot of people don't know, they hear blue chips and they think like computer chips, but what blue chips are just safe, well-established companies. And so uh you you're gonna see, your apples. You're gonna see your apples, you're gonna see your Amazons on there. But again, these are gonna be, you know, Pepsi. These are going to be Coca-Cola. These are going to be Johnson and Johnson. All of these names, you can see, and like Pep's been putting in some nice moves lately, don't get me wrong, but you can see the movement when it sells, it tends to trend. You're getting couple buck days, it'll spend massive amounts of time in consolidations before breakouts come. It might be your John Deere's, which of course can put in good moves, but because it's expensive, but it's gonna be a lot of life in shop followed by breakdowns, or a lot of life in shop followed by breakouts. These things, they're just here to stay. They aren't going anywhere. Merck obviously beat up really bad, but you're going to spend a lot of time consolidating. So it makes it really easy to tell you where to buy the dip, where to short the rip. Blue chip stocks should be kind of everybody's best friend, because they're safe. You can buy time. The contracts are cheap. They're oftentimes what's known as low beta, so they don't put in very big moves. And when you have low beta stocks, you can buy time for safety. And so I highly recommend you guys maybe find yourselves a couple of like the classic blue chip stocks, and not, you don't have to do your Apples and Amazons, get your Mercs, get your Nestle's, Pepsi, all of those, Coca-Cola, McDonald's, these safe companies that really just aren't going anywhere, and check them out. And so final thing we're gonna talk tonight, and again, this one's not necessarily a sector. It's things you can trade. And so that's commodities. And so what are commodities? Obviously, the ones that everybody are talking about right now are gold. GLD is the one that every single person trades. Gold, run of a lifetime, no stop in this thing. Excellent way to get yourself involved in the commodities market. Back in the day, I used to say gold is super fun, super safe, because, it's very respecting of technical analysis. Well, at this point, it's just running nonstop. We have a lot of outside influence on the gold trade. China's buying it. We definitely have inflation fears. We definitely have employment fears in America. So this is the inflation hedge. This is the flight to safety that people have used for 100 years, is the gold trade. When things don't seem great, go buy some gold. And so that's what we're seeing in this market. Obviously, the other one, silver, first time in 30 years, this thing is breaking out. It took it forever. Same sort of situation. This is a really great way to get involved in the commodities market. Silver, obviously, run of a lifetime again, but much safer, slower mover than gold is going to be. Obviously, I'm not saying chase these things at all-time highs, but as long as some uncertainty remains, it is definitely worth it being involved in the gold and silver trades right now. I've missed a couple entries. I've got a couple all right entries on them, but it's a place in the market worth watching. So last commodity we're going to talk is oil. I don't trade oil long. That's dumb. It's just a personal thing, but I just don't trade oil long. However, if I was going to be trading oil long or short or anything like that, and I'm not doing it by way of XLE, your Chevrons, your Exxons, all of those, as I said, great way to trade it. I'd use the USO, the US Oil Fund. This to me is one of the best ways to really, trade the prices of oil, trade oil as the commodity market that it is. Obviously, this thing is hilarious when you zoom out and look at this chart, but one of the best things about it, it lives life in a range. This is as far as things to trade oil on. This is, in my opinion, the absolute easiest vehicle to trade oil. Because we know if USO starts popping up anywhere to this 80 to 90 zone, you can short that thing. Anytime it dips down here into your 60, 50 zone, you can buy this dip. Very, very safely, very great way to be involved in the commodities market. Yeah, oil is absolutely super manipulated. What's wonderful about USO is that it trades like this. So you'll have some volatility. Like you can see it has the occasional big up days, big down days. For the most part, you're getting slow trending grinds. So, well, range with trends inside of it. So really great place to do. Obviously, if you want to truly trade oil, you got to hit CL, which is going to be, well, or there's other ones, but most people trade this one. This is light sweet crude. This is the oil futures. This is the one that makes absolutely heinous moves. It's unfortunate now because we have such a large disconnect from oil barrels of oil to prices at the pump that I mean, trading oil is its own beast. Like generally speaking, if you are a very good oil trader, you only trade oil because there's so much push and pull, world politics, all kinds of different things going on with oil that you need to be cautious. For us, because we aren't seeing, like, so back here, national average pump price was actually cheaper when we were here at at this 70, at this 67, than it is with oil down at 55 a barrel. So we just aren't getting that. They are, for there's many reasons, but we are not having the price of barrels of oil reflected at the pump most places. The national average is much cheaper last year than it is now at a $15 higher price per barrel. So there is just weirdness going on in the oil market all the time. That's why I recommend USO. If you want to be involved in the oil market, you look how this thing trades. It's free money over and over and over again. Eventually it'll break out. Eventually it will break down. It will come. We aren't gonna have Iraq war. Well, hopefully, we aren't gonna have that type of thing going on anytime soon. So you can just trade this thing like the range that it is, and it can be a really wonderful way to do it. So with that, that's all I got. Like I said, nice, we got 15 minutes left. Anybody have any questions? I know that it's, not the most exciting thing, but I just really wanted to open people's eyes to, there's other things to trade. You don't just have to trade tech. Don't be that person just trading Tesla that everybody makes fun of, like trade all these things, if something's setting up that healthcare is going to run, like, we get some ACA passage or something like that, hint, hint, maybe have your eyes on some of those XLV trades. If we know, home sales are doing really good, go check the industrials. Like you don't have to know a lot. You don't have to know a lot about what's going on, but okay, well, it's tough right now because so much of it's being withheld, but that'll pass. Use the data. Like if you see home sales are going good, mortgage rates are going down, things like that, start looking into, your CATs, your GEs, those kinds of things that can benefit very well from it. If there is, Middle East tensions, things like that, you can check the oil sector. A person brought up earlier, we have a little bit of funny, we had a little bit of funny news coming on the financial sector today about some credit scares in some of those regional banks. So maybe keep your eyes on financials. Like I said, you don't need to be super in tune. Just read the news, say, okay, what stocks might that work for, and trade those stocks. And I think you'll probably start having a lot more success as opposed to just chasing the tech trade over and over again. But so with that, any questions, any concerns? I see we got people getting out of here. Thank you for being here so much. And let's get some questions or do some charting or something. Oh, I see a few in here. Oh yeah, so we did IWM. Yep, we did FOMC. I don't really ever clear my levels, man. There you go. I mean, sometimes I'll like start a new one, but or like I'll do a little thin out, but like, man, you gotta like, if you have too many levels, it's of course crazy, but like, I mean, even right here, 515 to 545, this is a $30 move on QQQ. When we zoom out, it looks like a lot, but I can guarantee you that there is 10 levels, in fact, in a $30 move on QQQ. But when you zoom out and get it scrunched down, it just starts to look a little bit crazy. But be realistic, and still just, mark your daily levels. If a daily level is supposed to be there, it's supposed to be there. That's all there is to it. Yes, oil is definitely manipulated. That trade inside bars. I mean, I take note of them because it can be a change of direction for you. So I do, I'll take note of them, but rarely am I ever going to take a trade based on an inside bar. I like to like I'll use an inside bar as an exit. If I've caught the move and now we're setting inside bars, I'm going to stop out of that trade because they're basically going to be, they're oftentimes dojis, things like that. So it could be where the reversal comes, but never going to take a trade just based on inside bars. I'm assuming you're reading Brooks. He does do things like the IOI, inside, outside, inside, things like that, which is a little bit different than just an inside candle. Oh yeah, nice to be able to watch this. Got to be honest, I don't have a watch list. I just watch like 10 things. As funny as it is that I'm telling you guys out there that there's hundreds of things to trade, I don't think you should trade all 100 of them. You should find 10 things you like to trade and stick with those for sure. Can you show how to read level twos? Nah, nope, market's closed. And it's just not something you can teach when the market is closed. Because there's no volume, there's nothing to see. So like, I mean, we can pull up the time and sales on the futures right now. I'm gonna have to go down sizes. There's a bunch of ones. There's just algos passing things back and forth. That's all that's going on right there. Yeah, there's just not enough volume, so you can't like see what's going on. I will tell you, time and sales, much less important than level two. Time and sales, the orders have filled. So because the order is filled, they have had their effect on the market. You can see a big order on level two and see if it pops up on the time and sales to confirm it was filled or confirm what side it was filled on, ask bids, those kinds of things. But as a whole, time and sales is not. I've personally never found a need for it. I check level two a lot. It can be great to say, you're buying up to a level, you look for buyers to break through it or whatever it is. Shark's interested in bull longs. It's probably at the bottom of its zone. Yeah, piece of cake. I mean, I'm not shark, but like, you buy bull here and you stop out under 10. Like any of these dips down to 10, even 950, you could say you buy down here. This is where you want to buy these types of things. And then you dump that pig up here because this is like, dude, they did an offering like right after they IPO'd. Like that's so bad, this thing has so much to prove. But I'm not speaking, like I don't want to speak for Shark, but this one is like pretty cut and dry. You're building a nice little base. You're buying the bottom of the range. You got about $1.25 a risk down. Granted, that's 10% on a $10 stock, but you got about $1.25 a risk down, which in the world of options, if you're buying options, is nothing. And if it's shares, like I said, you got $1.50 a risk on the trade per share. So not huge risk. Super easy place to be a buyer. Super easy place to add more at 10. The main crash kept telling people we did not like it at 15 and 16, and they called us crazy. Team. Never even heard of it. What's team? Atlassian Corp. Oops, that's not what I want. Wow. What's team? But on the ugly side, this sick little wedge right there. What's your earnings in 2 weeks? Can't lie, you get a little poke down here. I mean, I even like the trend hold right here. I won't be surprised because this is ugly. If the market wants to keep selling, I will not be surprised to let's see. Yeah, so far the weekly is setting up ugly for this thing. But so I won't be surprised to see us poke back down here We get close down to this 140, I buy that. I mean, you could take the early entry around 147 here with plenty of room to add if we get down to the 140, but I cannot lie to you, that is not. Let's see, man. It's really not a half bad trade for longs right here for a little swing. I mean, and honestly, probably what I would do is I would try to buy the dips down here into like 147. If it looks like we're going to get the daily close under the trend, probably just run the tight stop. You might end up getting stopped, and this is like a little double bottom that sets up. But with the selling that's been going on this thing, failed this breakdown, but I wouldn't be surprised to see it poke down here one more time. And if you can get down here, this 135, 140 range, that's the other place I'd like to give it a stab. Do I scalp Mag 7 stocks? Nah, I day trade them. You know, because the contracts are more expensive. Like if you're gonna scalp, lowest money for maximum reward is key. And that's what same base buys and QQQs offer. If you're scalping, it's kind of the place to be. I mean, I don't want to encourage anybody to trade zero DTEs or anything like that. But if I'm buying a, $250 Apple call or, $300, $400 Microsoft call, I don't want to just scalp that thing for a little pop. I want the setup to be better, so that I can ideally catch a bigger move in my favor. So if I'm scalping, looking for my 2, 3, 4 candles, 1 to 4 candles really, then it's always going to be Spire QQQ. If I want the better day trade, it's going to be your Mag 7 AMs, Coca-Colas, all of that, Yeah, I know. I remember that. I do remember that. Nah, I've never heard of that, man. Thanks for pointing this one out. This is a nice little trade. I mean, I don't know anything about the company, so I can't speak about its financials. Generally speaking, when something is down 66%, I'm doing quick math in my head, off of the highs, it is for a reason. So the earnings coming up worries me a little bit, but it's a reasonable enough technical setup to at least take the stab at it. You might get stopped out, and it shouldn't be a super painful loss if you do. So for me, great question too. As do I plan it ahead? I don't plan it ahead. I'll know things that I want to buy. So like I took a Starbucks trade. I knew I wanted to be involved with Starbucks up here. So I was waiting and waiting and waiting, and then I started buying and buying and buying, like I bought in the zone I wanted to be buying in, to hopefully catch this upside move. So this type of thing, longer swing, is going to be planned, and I'm going to sit and I'm going to wait for it. But generally speaking, intraday, like because I trade all of my most of my charting, I'll say, is done on daily. It's all daily levels, trends, things like that. Of course, I draw intraday trends as well. I take the setup when it comes to me. Amazon is one. I mean, I can just point it out. And it's funny because we talked it yesterday in lecture. I pointed out Amazon. I said to me, like, this to me is one of my absolute favorite setups in the market. Strong sell down, 3 push wedge, massive support zone. I'll buy this every single day, every single time. So I'll wait for this to set up intraday to trade it. And then we come into today, and what do? We set virtually the exact same pattern at the exact same spot and put in a very, very similar run that I also did not take the trade. So, I mean, I might know on Amazon, and I mentioned this, that I like the dip buy off of that 213 area, but maybe it comes today, tomorrow, you don't ever know what's going to happen in the after hours. It's funny, somebody brought up Mastermind, and a couple of the masterminds ago, well, this one was also Insanity in the March, April stuff. But it was the first night of class was when Japan unwound the carry trade, and markets were getting throttled. Uh, some of the Asian markets were down 15%, and so I was trying to do charting, and by the end of the charting lecture, I was like, okay, every single thing we just charted, we are dollars past it. Like it's not even worth it. So I do all of my daily charting, and then I let it set up intraday. And then because I only watch you know, because I only watch like 6 things, they all provide a trade every day. So I don't need to go hunting for a bunch of trades, you know, like maybe Amazon sets up for me, maybe Apple sets up, maybe Microsoft sets up, or XLF or T or Coca-Cola, you know, the names that I watch. And so when that setup comes, I take it. But you know, we don't know what the market is going to do tomorrow, today, because if we did, we'd all be billionaires, you know? So we got to wait for the day to come, you know? How much time would I buy on it? Is this on is this on team? I mean, a month or shares, a month or shares, depending how you trade. Because I would want this move to come quick, and I likely wouldn't want to hold through earnings. Again, I know nothing about their financials. Well, you're saying that their fair market values. Give me 1 second. What is this? Well, their PB ratio is 29.45. So that means they're trading at 30 times, basically. Oh, wait, no, that's old. That's old. Hold on, hold on, hold on. Yeah, as of October 2025, they're trading at 28.2 on their PB ratio. That's their price to book ratio. So they're trading at 28 times their book value. So uh, um well, and they have 1.24 billion in debt and 1.35 in equity. I mean, I don't know. That's a 92%, you know, debt to equity ratio. That's likely not ideal. I wouldn't be like long on them. I would want this trade to work fast, sooner than later. So that to me is what I would really have my eyes on there. You know, this bounce either works or it doesn't. Like I said, it's just a nice technical setup. I mean, funny enough, look, like you guys can see all of my charting is the same. So I like this dip buy right here on the daily chart. Then, as you guys just saw on Amazon, like this is like the same setup on Amazon. I like that technical setup, no matter the time frame, no matter what, you know. Not saying they're going to react the same or do the same thing. You never want to say, well, this chart looks like, you know, Nvidia looks like AMD or whatever. Like that doesn't matter. But we can say 3 push wedges oftentimes give us a bounce when we're getting them off strong support, which is what we have happening on the daily chart, same as what we have happening on this 5-minute chart. Yep, no problem. It depends on the contract and it depends on how fast I want the move to come. So Starbucks, and I'll use me as the example, because I was in there early, you know. So I honestly don't remember what day I started buying. I believe I started buying on this day. Market just happened to get throttled. My plan was add at the trend, and if we got all the way down here, add here with the super tight stop. I knew this was like, you know, this was last chance support on it. So because I knew my move might not come quick, and don't get me wrong, I didn't think this clobbering was coming in 3 days. You know, I didn't expect it to go 81 to 78 in 3 days. Market got wrecked. That's all, you know, that was all there was to it. So I expected if the sell came, it was going to take a little bit longer and we were going to kind of grind down into here. It just so happened to come in 3 days. My ultimate target is 85. We got to 84, like 90 something or 80 something today. 84, 89 today. My ultimate target is 85. And so I bought November contracts. I wanted to have, and you know, November 20th or 17th, I don't remember the expiration off the top of my head. I bought November contracts because I knew that my plan might take a couple weeks to play out. It just so happened to play out in 6 or 7 days or whatever, you know. Let's see, I'm looking real quick. The November 21st contracts on this. I bought that much time because I thought the trade might take a little bit. A week or so ago on Nvidia, not encouraging this. A week or so ago on Nvidia, I was trading this little breakout here. You know, little trend break here. Happened to get long, nice. Saw the trend break, Nvidia is a momentum, ripper. You guys are gonna laugh at this. So I swung weekly. I said if Nvidia is gonna pop, it's gonna pop tomorrow, And so I swung the weekly on it. Happened to get news overnight, so it's a much bigger pop than it would have been. My goal was 191, this 190, 130. But the pop was either gonna come the next day or it wasn't gonna come the next day. So I swung a weekly. You might notice it was also a Wednesday. So I'm not encouraging that, but that was my thesis. This move is gonna come fast. And so I'm gonna swing and it's going to work or not at open. And that's, so it all depends on how long do you think the trade is going to take. We see a lot of people, and I'm not like trying to be mean to anybody, and I would never be like, I would never I would never discourage somebody from buying time and buying, as much time as you can. But we see a lot of people that swing trade that, they take some bad trades. So they buy like 3 or 4 months of time. So it's really, really difficult to be wrong. They lose a mountain of opportunity cost by doing that. But buy, if you think the move's gonna come in 3 weeks, buy 5 weeks worth of time, always give yourself a little bit of extra padding. But if you think whatever move you're looking for is gonna take 5 months, look for a different trade likely, find yourself a better entry where the move is likely to come sooner, or buy shares, and you can do like Anth does, he's like, he doesn't know when the move's going to come and he doesn't care when the move's going to come. And then he just uses options as virtually leverage shares. He's buying 2027 leaps. They got no theta and they move perfectly to the delta. So it's like you're getting shares at a discounted rate, but if you're looking for a swing trade on options, you want that move to come quick, and you don't want to just sit in an option getting wrecked for weeks waiting for that move to come, because that's where the bad opportunity cost side, comes into play. Yep, Moon, no problem. Okay, well, that's gonna do it. No more questions. Thank you everybody for being here. We will catch y'all tomorrow, Friday morning. I'm excited. All of the like good teaching that I do about responsibility, we just gonna chuck out the window tomorrow. So we'll catch you guys tomorrow. Have a great rest of your night, and thank you.